Welcome back and welcome David Morgan. David is our silver and precious metals expert. And I tell you what, David called this sell-off and where we are right now to the T. I'm 3 for 3 with David over our time together. David, how you doing?
I'm doing well, Alan. Thank you.
How are things out in the Pacific Northwest?
Well, a little cold. We had our first good snow here a few days ago. It's melting off now, but it looks like wintertime around here.
David, as you had predicted not too long ago, we were going to see the metals come under pressure as the stock market tanked. It is certainly tanking right now. This is about to be a very good buying opportunity, is it not?
I believe so. We sent out a alert for our paid membership, and based on two things. One, the stock market action and a little bit of reality after the election setting in and being completed. So we watched the HUI and most of the main indexes on the mining equities show they were breaking the 200-day moving average. Not a good sign on the short term. So I am looking for a pullback in the equities, and, of course, the metals will probably follow. But I also stated in that update that I thought the metals could go sideways or even higher while the equities are going down. There's a very good reason for that.
Go for it.
The reason is that the equity investors for mining equities are actually different mentality than the gold investors for hard money. In other words, buying gold, the asset, gold, the commodity, and silver are a different mindset, generally speaking. Not that a lot of people don't buy both shares and physical metal. But generally speaking, a physical metal is a hedge that is outside the system, and gold is the most negatively correlated asset to the stock market. But gold stocks are stocks, and they generally do what the stock market does initially. So if we have a big sell-off in the general equity market, gold stocks usually tend to go down or up with the general market. And once that's completed, you'll normally see gold stocks turn around before anything else. The best example in recent history was the 2008 financial crisis. The gold stocks got hammered with everything else, but the first turnaround were the mining equities, the gold stocks. They picked up very early. The general market didn't pick up until several months later. So it's a good leading indicator, but you got to be kind of savvy about this stuff. I've been in this market, as you know, Alan, for about 4 decades now, and I just saw it happening. I gave a warning to our people. And, of course, it's hard to tell people what to do. I mean, if you were in early like I am, this kind of pullback might be annoying, but that's about all it is. But if you just got in, during the summer and you saw some nice profits up until, let's say, a few weeks ago, and now they're pulling back, you might want to take some defensive action like buying puts or whatever. The only problem now is it too late to protect your position or not? And I'm thinking probably not. I don't like the way the general equity market's set up. I don't like the overall, the look at the S&P, the DJI, transportation index, anything you like to name in the general equity markets. I think we're looking at some kind of a rather significant pullback over the next several months. In fact, I'll go on record, Alan, and you can't get back to me for about a year, but I think the overall trend for 2013 is going to be down in the stock market.
Oh, I would agree with you wholeheartedly. Now, I do have a 1 year of the SLV, the Kitco, as you know. It's kind of flaky sometimes when you're going out. And anybody who started the year off in the metals now has officially, for the 13th year in a row, outperformed the stock market.
Absolutely, and of course that's something you just do not hear on the main financial channels and programs like yours, Alan, when you're willing to speak the truth and stick your neck out and give people alternatives. They get the real information, but it's just something that's basically ignored. The only time you really hear gold in the headlines on one of the major financial channels is when it's going down. They seem to always be able to find that newsworthy, but when it's going up or against asset classes. I mean, if you look at the silver performance during the Obama years, silver was the best performer of all assets over the last 4 years. Silver was, but you're not going to hear that on these major channels.
Well, I think, is it 12 or 13 years in a row now?
Well, silver has not been up every year in a row. Gold has. So for gold, it's been like 12 years.
Including this year, because, you can see it's going to outperform again this year.
Correct.
That means all this stress that everybody's had, picking stock levels, worrying about this and that, all they had to do was buy gold on December 31st, and 365 days later, they've outperformed all other asset classes.
That's right.
seems to me to be a whole lot less trouble. Silver, likewise. I mean, I've always, gold is gorgeous, and I have gold. I love gold, but I'm always had an affinity for the silver because I think silver has far more to run than gold.
Well, I believe silver will outperform gold by the time the market tops out by a factor of conservatively 2 or 3 and possibly as high as 5. And if we go back to the historic levels of the monetary ratio of 16 to 1, and we're at 50 to 1 right now, that implies about a 3-fold increase over gold. So if gold went to whatever, pick a number, 2,000, 3,000, 5,000, I don't care, and you take up 1/16 of that, that'll give you an idea of where I expect silver prices to go. But this is what I believe. It doesn't make it a fact, but we do have history on our side. If you look at what happened in 1980 at the top of the market, we did briefly touch that monetary ratio of 16 to 1 when both peaked. Gold was at 850 and silver was at 50.
You know, I'm glad you brought that up because I did get my updated real inflation numbers last night. The September 5th, 2011 is now the new historic high for gold at $1,895 per troy ounce London afternoon fix. The previous all-time high, $850 on January 21st. If we were to go back and tally up gold based on the Clinton method of accounting for inflation, that $850 in 1980 would compute to $2,527. However, if we go back and count it the way they did under Ronald Reagan to hit that previous $850 high, gold would have to now be at $9,548. That's a staggering number. Silver, if we use silver to hit that previous high, you know, when the Hunt brothers were trying to corner the market at $49.45 London afternoon fix per troy, today it would have to hit $555. David, I think we got a lot of room to run.
We do. In fact, my next presentation at a major gold show is going to be up in British Columbia, and I'm going to take the time to talk about how these moves are made in the stock market and the housing bubble and everything else. They get this manic panic buying phase, and I'm fond of saying that 90% of the move comes in the last 10% of the time. If you look back in history, in 1979, silver started off the year around $6. A year later, it was at $50. So if you were a good speculator, you could have not gotten in the market for the 15, 16 years from the time the coinage was changed from 90% silver to the Johnson slugs in 1965, and you could have held from 1965 to 1979 and made a decent profit. But the speculator, this is hypothetical, but there are people that did this. They got in 1979 and rode that last year, did far, far, far better than the people that were investors that held it from 65 to 79. So I really want to point that out because so many people come to me and they say, I'm too late, I'm too late, I'm too late, I'm too late. And you're not too late. You're not even close to being too late. As far as I'm concerned, we've got the best moves ahead of us. The problem with the big move ahead is people get greedy and they don't understand how these markets move. And it's just like all these people that got wiped out in the housing bubble or all the people that got wiped out in the tech wreck. They don't know when to take profits. You know, nothing grows to the moon. And that's the problem that we will face in the future. I don't expect the top of the market, Alan, until probably about 2016.
David,
so we've probably got about 4 years ahead of us.
David Morgan, the Morgan Report. David, we're out of time, guy.
Thank you.
We'll be back on the other side of the break.